Hey everybody, I'm Logan Alec. I'm a CPA. I own Choice Tax Relief, where we help taxpayers who owe at least $10,000 in back taxes to the IRS or to their state, or who have multiple years of unfiled tax returns. And today, the topic I'm going to talk about is what to do when you get a notice of levy. Okay, a notice of levy is a notice from the IRS that it intends to levy you. And levy is just kind of a government speak for take your stuff. They can levy your bank account. They can take the money out of your bank account. They can levy, aka garnish your wages. That is, take money out of your paycheck. And when we're talking about a notice of levy, okay, a levy notice from the IRS, you have to know what kind of levy notice you're looking at, okay? Because there's different kinds. There is the notice of intent to levy, such as the CP 504, okay? And then there's the final notice of intent to levy, such as the LT 11. Both of these are bad. You don't want them, okay? The game plan when you receive one of these is similar, okay? But there's something additional you need to consider if you get the final notice like the LT 11 or letter 1058 from a revenue officer. Okay, basically the bottom line is this: you are in, if you get a notice of levy or intent to levy, you are in the IRS's crosshairs right now. Okay, that means, you know, 3 years ago your account might have been floating around in ACS, not really being worked. Well, now guess what? The IRS is intending to start working your case. They've made it very clear to you that they intend to start taking your stuff to satisfy your overdue tax liability, and you need to do something about it. The first thing you can do is perhaps contest the liability. Okay, so for example, with this notice here, the IRS is said that our client owed $68,000. Do you really owe $68,000? Is some of this amount attributable to an SFR, a substitute for return the IRS prepared for you because you didn't file your original return, and this SFR the IRS prepared is grossly overstating your tax liability? Okay. Did you get a CB 2000 at some point in the past because you didn't report some stock sales or some 1099 or some 1099R on your tax return? The IRS just assessed you at that gross amount for those stock sales or that other 1099 or whatever it was. Maybe you need to go back and fix that problem with the IRS and say, hey, I actually had expenses I could count against this 1099. Hey, I actually had basis, believe it or not, in these stocks that I sold. Okay, those are all ways that you can bring this liability down. Penalty abatement. Have you pursued penalty abatement with the IRS, right? You've got to go to bat for yourself here, folks, and don't let them walk all over you. But assuming that this balance that you see on this notice, in the CP 504, it's 68, in this sample LT 11, it's 71. Assuming that you actually owe that amount, you got to figure out what you're going to do with it, folks. Because if you don't, guess what? The IRS is going to take it from you. Let me say that again. Once you receive a levy notice from the IRS, you need to figure out how you're going to pay back the IRS, or else the IRS is going to figure out how you're going to pay them back themselves. So that's why it's vitally important that if you get a levy notice, that you put together a game plan as soon as possible. Maybe this game plan is borrowing money at a low interest rate, right? Maybe from friends or family, or you have other sources of money you can borrow to just pay the IRS off in a lump sum. Obviously, not everybody has that option. And so they need to pursue some kind of tax relief program with the IRS. And these are the things that I talk about all the time on my channel. I have a whole playlist of tax relief. Or actually, the best video you should watch is, what is tax relief? Okay, I'll link to that video at the upper right-hand corner of the screen. But basically, you got to formulate a game plan here. Okay, you got to figure out what you qualify for. Do you qualify for an offer in compromise to settle this, $68,000 of tax debt for less than you owe? How would you know if you qualify? Watch my video on the offer and compromise formula, the offer and compromise guidelines. Link to that video at the upper right-hand corner of the screen. It's a few years old now. Some of the numbers are outdated, but the concepts still apply. Okay. Okay. If you don't qualify for an offer in compromise, what else can we look at? Well, do you qualify for a hardship-based installment agreement, a PPIA? Sometimes we call this the rich man's offer in compromise, okay? Because it still allows you to pay off not all of your debt, pay only a portion of your debt back to the IRS before it falls off at the IRS's 10-year collection statute expiration. Link to my video on PPIs in the upper right-hand corner of the screen. If you can show the IRS you can't afford to pay them anything right now, you might qualify for CNC, currently non-collectible status, aka hardship status. This is theoretically a temporary placement that the IRS puts you into because you've showed them that you cannot afford to pay them right now. Link to my video on currently non-collectible status here at the upper right-hand corner of the screen. What I'm saying, folks, is you need to educate yourself here, understand what you're up against, arm yourself with knowledge, and that can be from my videos, or pay somebody who has the knowledge here and the experience to represent you before the IRS, such as myself and my tax professionals at Choice Tax Relief, put together a game plan for how you're going to deal with this tax debt, okay? Or the IRS is going to tell you how they're going to deal with the tax debt, and that's going to involve sending a notice of levy to your bank, telling your bank, give us all the money that's in the account. That's going to involve sending a notice to your employer saying, hey, employer, you know how you direct deposit all that money into your employee's account every couple weeks? Well, actually, don't do that. You can leave them a little bit. Here's how you calculate what to leave them, and you give us the rest. Okay? Oh, an employer, if you don't comply, you're on the hook, right? So if you don't want to go that route when you get this levy notice, then you have to be proactive about your situation. You have to figure out what the end goal is here and make your case to the IRS. Now, there's one other consideration. If you have received, say, the LT11, if you're an ACS, or the letter 1058 if you're with a revenue officer, and that is what is mentioned right here. Notice of intent to levy, we've talked about that, and your collection due process right to a hearing. Okay. I'm just going to tell you what we do at Choice Tax Relief. Well, first, let's explain what this is. I'm going to make a fuller video on collection due process, aka CDP hearings. But basically, a CDP hearing is an arena with someone from the IRS Independent Office of Appeals, which is separate from the Collections Division, where you can argue your case and you can protest the IRS's proposed levy action. And you can tell them why you don't think the IRS should levy you. Right? You don't think they should go through with this proposed levy action. If you submit a request for a CDP hearing on Form 12153, okay, by the deadline stated in the notice, right? For example, the deadline is here under how to request an appeals hearing. It's going to be 30 days from the notice date. Okay, so the notice date here is August 19th. The deadline then to request a CDP hearing is September 18th in this case. Okay, so right. So if you request that hearing, then the IRS can't levy you during that period of time when between the time you send out that timely CDP request and the time that appeals makes a final determination on your case. Okay, and yes, you can, if you don't like the appeals officer's determination in the case, you can make a tax court petition. You can petition tax court. You can petition the tax court to contest it. Okay, we generally request a CDP hearing whenever one of our clients receive a final notice, under the theory that by virtue of the fact that they have paid us, a group of professionals, tax attorney, CPA, EA, to represent them in this matter, to get them in compliance and into a resolution, right? Just based on that fact, IRS levy action is more intrusive than necessary. Okay, taxpayers have a right. The IRS collection action will be no more intrusive than necessary. Okay, so that's generally what we do. I'm not saying that you should do that, but that is generally what we do for our clients. So that's another thing to consider if you did get the notice, not only of intent to levy, but also your notice to a CDP hearing. Folks, I have covered both of these notices, the CP504 and the LT11, in separate videos. If you have received one of these notices and you have not watched my video on that particular notice, I would recommend you do so now. My video on CP504s is going to be at the upper left-hand corner of the screen right here, and my video on the LT11 is going to be at the bottom left-hand corner of the screen right here. Thank you so much for watching, everybody. I'll see you in the next video. Bye-bye.